Hello, everyone. Welcome to the CalHFA Audit Committee meeting this morning. I'm Delilah Sotelo. I'm the chair of the CalHFA Audit Committee. And I'd like to go ahead and have other members of the committee introduce themselves. Let's see. Standing in for State Treasurer Fiona Ma.
Patrick Henning, I'm the Chief Deputy Treasurer for the state of California.
Wonderful. Thank you. Welcome. And we have our esteemed other CalHFA board member.
Thanks, Chair Sotelo. I'm Fred White, board member at CalHFA.
Wonderful. And thank you for all the guests that have joined us as well as the public. So we really appreciate having everyone on virtually. And if you have any problems with your audio or camera, please raise your hands and we will take care of that. So Melissa, let's go ahead and officially start the roll call.
Great. We will be happy to do that. As a matter of formality, since we know Mr. Henning, do you say that you're here? I didn't hear you.
Here.
Thank you so much. Dr. White?
Here.
Chair Sotelo?
Here.
Okay, just a couple of things in regards to compliance with Bagley-Keene. I remind all the board members, please stay on your video throughout the entire meeting. If there is a need for you to leave your video, you will have to disclose the reason for leaving and shutting down your video. I need to ask this question of you. If there is anyone in the room that's with you that is 18 years or older, and if there is, we'll need you to disclose their relationship to you. So I'm just going to quickly go through the list again. And if you'll let me know if there's anybody 18 years or older in the room, I'd be happy to hear that. Mr. Henning.
Nobody else is in the room.
Thank you. Dr. White.
No one else is in the room.
And Chair Sotelo.
No one else is here.
Thank you. With that, we have a quorum.
Wonderful. Thank you very much, Melissa. I'd like to go ahead and start with the agenda items. We have the approval of the meeting minutes for our meeting back in November of last year. So if anyone has any comments or any changes to the minutes.
No comments.
No comments. Okay. Do I hear a motion to approve the meeting minutes?
Motion to approve the minutes.
Wonderful. Okay, so I think the minutes are approved by consensus. So item number 3, we've got my basic comments. As the committee members know, we meet twice a year, once in the summer and then once in the fall. I guess this is considered the beginning of the fall. So I guess we'll do once in the fall and once in the winter. But today's agenda includes a report on the audit for the year ending June 30, 2023. We're going to be hearing from our guest speaker, Mandy, and her team. We've got some additional reports on other audits and an overview of our program compliance. So it should be a pretty effective, efficient discussion of our compliance and our audit forecast. So let's go ahead and get started with that. We're going to go ahead and I have nothing else to report other than to forecast that at our next meeting, we will be considering the charter of the audit committee. So we'll circulate that charter to make sure that the committee members are aware of its contents, and we'll make sure that you have the information well ahead of the meeting so that if there are any questions or any issues that come up with regard to the charter, we'll be able to discuss that at the next meeting. So Mandy, I think that while Oksana is speaking, you may want to take a look and correct your visual on screen. But with that, I'm going to go ahead and turn it over to Oksana, who is our CalHFA Comptroller, and she'll introduce this year's update as well as our guest speaker. Thank you so much.
Thank you. Good morning, Madam Chair Sotelo and members of the Audit Committee. My name is Oksana Glushenko and I serve as the Agency Comptroller. Today, I'm here to discuss the results of fiscal year 22-23 financial audit. Joining me are Principal Mandy Merchant and Senior Associate Elizabeth Richardson from Clifton Larson Allen. Last year, I mentioned that our collaboration with the State Controller's Office to enhance the timeliness of their reporting on pension and post-employment benefits. I am pleased to report that they have engaged an independent auditing firm to conduct a standalone audits for these areas. As a result, we completed this year's financials almost 4 months earlier than last year. My team and I have maintained close communication with the State Controller's team and anticipate even a closer and quicker turnaround for fiscal year 23-24. I would like to extend my gratitude to our CalHFA team for their invaluable assistance in preparing our annual financials and to our Clifton Larson for their guidance and diligence throughout the audit process. Without further ado, I would like to give floor to Mandy and Liz for their financial presentation. Thank you.
Thank you, Oksana, and thank you to everyone that is on this meeting right now. We appreciate the opportunity to present these results for the June 30th, 2023 audit. We do have slides that I'm not sure if someone's going to be able to bring up and share. And then please keep me posted. I don't know why my video keeps going out. So if you guys see me go in blur again, please, say something. All right, so we can go ahead to the next slide. And just briefly, as Oksana said, my name is Mandy Merchant. I'm joined by Liz Richardson. We have been working on the audit for CalHFA for the past several years. The one thing we think we bring to this agency every year is consistency and knowledge in the history of the agency. So that makes it nice knowing a lot about you and being able to apply our audit procedures each year. Being like a reoccurring auditor, we also bring a lot of new stuff to the table, and we'll talk about that later. There's been some change in audit standards, some new GASBs coming out, so we'll go over that a little bit later. So just to kind of go over the agenda real quick, it's just obviously we'll go over what was our audit scope and the process involved for doing this audit this past year. We'll talk about the audit opinions and our required communications with governance, which is everyone that's on this call from the audit committee. We'll talk about some financial highlights. Liz will go over that. And then we'll touch base on the governance communication. And then I'll talk about the upcoming GASB standards and some new accounting or auditing standards that are changing for next year over the overall reporting. So let's go to the next screen. All right, for this, just to kind of go over the audit scope, you can kind of see we kind of have laid out all the different kind of milestones or audit reports that we have as part of this audit. So obviously we have 3 reports that we issue that are included in the ACFR or the single audit report. So there's the overall report on the internal controls of the financial statements. We also have the internal control report over the financial reporting, the compliance, or as we call it, the GAS report. Then we have the major program report, or the internal control of the compliance with major programs. So that is where we do the single audit for any agency that receives over $750,000. Just so you all know, that has changed. So going forward, that'll be for over $1 million. You all are well above that, so we don't have to worry about that. You still will be having a single audit. And then 2 other things that we do, we will be talking about the government's communication, or they call it the SAS 114 letter, which basically summarizes our procedures and our audit and how everything went. And then lastly, we submit the data collection form, which is the single audit package we send into the Federal Audit Clearinghouse. And that is basically the last step that's part of this whole entire audit process. So in the next slide, just want to kind of give you an overall kind of view, 50,000-foot view of the audit process. Here in most firms, most audits, it is a risk-based approach, which means that we do a lot of planning in the beginning and kind of assess the agency. We have a lot of conversations with the staff, review your internal controls, look at your accounts that you have. And then based on that, and then industry knowledge and working with several other HFAs, determine what is the risk for the agency and where should we be spending our time as part of our audit. And so I kind of highlighted a couple things on here. So our big thing is just understanding your internal controls. If internal controls and the review and approval process are strong, then we assume that, you know, the ending numbers that are reported in these financial statements are correct. Revenue recognition is a very big hurdle we must get over, just ensuring that the revenue is reported correctly, that you're not recording revenue too soon, too late, for recognition purposes. Significant estimates, we'll talk about that a little bit later, but that is something where a lot of management termination and outside third parties, because you do have the OPEB and pension coming from the state, there's a lot of estimates involved with that. So we'll go into that a little bit more. And then just kind of looking at the largest numbers, when you look at the financial statements of CalHFA, you know, you see those very large loans receivables, you see the very large debt amounts. As we like to say, we hit those balances hard. You know, we do a lot of confirmations with third parties. We send out confirmations to the people you're serving to ensure those balances are accurate and reflected correctly on the financial statements. And then last up, obviously the single audit, which we'll talk a little bit more about. And this year there was just one kind of update in the auditing world. It was the adoption of GASB 96, which is related to subscription-based information technology leases. So if you had any kind of, you know, just reoccurring software charges, there is lots of criteria similar to the lease standard that we had to go through. You guys have a very robust IT department with lots of software involved. So we spent a lot of time going through that to see if anything met that criteria. So let's go to the next slide and kind of talk about the results of all the audit opinions. So what I love about this slide is that it's a great slide because you all did fabulous, okay? So in your financial statements, you had an unmodified opinion, which also means clean opinion. So based on our risk assessment, you know, based on our review, we did not find anything materially misstated as part of our opinion. Same thing with the federal awards, looking through them and doing an audit of the federal awards. We did not have any sort of audit findings. We maintained an unmodified opinion. And that just kind of goes about with the audit results. So in the financial statements and federal awards, we did not have any audit findings, which is great. So the past 2 years, we've had completely no findings in either of the reports. So congratulations to you all. I know for many years, there was always some sort of compliance finding out there, but this is great to kind of see this kind of, you know, year after year, no issues noted.
And with the chair prerogative, let me just stop you for a moment and congratulate the team, Ms. Johnson Hall and Oksana and the team. Congratulations. This is fantastic news.
Thank you.
Go ahead, Mandy. Sorry.
Oh, no, you're fine. Okay, so then the next slide is our governance communication. And you would have received a separate communication letter, a small letter that kind of summarizes all of this together. And just kind of communicates like our overall responsibilities under generally accepted audit standards. You know, what's really important is that we planned this audit. We came into it, we developed a plan and we executed it and we didn't have to go back and change it. There was no surprises. Actually, the biggest surprise was that the state got us everything earlier. So that was a very welcome surprise that we were able to get the job done earlier than in prior years, as Oksana mentioned. And then obviously the adoption of GASB 96, again, we went through that, evaluated, and there was no impact determined. What we are seeing from the standard is that a lot of long-term software subscriptions are usually annual, month to month. We're not seeing anything over the 12-month requirement. So that makes it great. So we had no difficulties, no disagreements with management, and we are not aware of any consultations that management had with other accounting firms. As for the estimates that I mentioned earlier, just a couple things that are in the financial statements is the allowance for loans receivable, which is a very significant one. So that is related to the single family and the multifamily loans. Management, you know, determines based on historical information, you know, what is a reasonable allowance in these. And they have a very in-depth review that they do, categorizing them based off of, you know, delinquencies and, like, again, just looking at the history. And then obviously the pension and OPEB, the state hires an actuary that helps goes through and determines, different criteria, and those are provided to CalHFA that we record. So just letting you know that there are estimates out there that have been included in these statements. And then we did not have any audit adjustments, and we did not have any uncorrected misstatements, which means we didn't find any, difference that was at a level that wasn't material, but it was above a threshold that we still had to report to you all and management. Okay, I am going to kick it over to Liz to kind of go through a little high level of the results.
Thank you, Mandy. So we have the statement of net position here. I'm not going to dive into every single change, but we have a summary showing the changes from FY23 compared to FY22, as well as comparing FY22 to FY21. And as you can see, cash and investments increased significantly during FY23. And the main cause for this $155.8 million increase was due to some more favorable market rates, as well as the receipt of funds for the SB2 program, as well as the AB 101 program. There was also a $99.4 million increase in program loans receivable, and this was primarily due to just some additional loans funded during FY23.
Those are, Liz, that's multifamily loans or that's single family loans? Is that broken out?
So that is combined, and I looked overall, it was around 500, a little more than 500 additional loans funded in FY23 compared to FY22.
Okay. That's significant. Thank you.
All right, we can go to the next slide. So here we have the liabilities, and again, I'm not going to go into detail of every single change, but we're going to hit the largest items. As you can see, the loans payable increased $49.1 million in FY23, and this is primarily due to the issuance of some additional loans with the Federal Finance Bank, FFB, as well as increased on the credit facility loan with Brayburn. And then we also noted a decrease in other current liabilities of $6.2 million. This was primarily due to the termination of the swaps that had been on the books.
And I think we just have those couple swaps left now, right, Oksana? There's not much left.
So Mandy, so we actually are doing different swap, different basically approach. So we used to have an orphan swaps, which were tied to the older bonds, the variable bonds. And so those orphan swaps, thank you to our financing team, has been terminated completely in that actually fiscal year 22-23. The current swap methodology that we're doing, the current approach, is we have a forward swaps that it's basically tied to alleviate the increases for our multifamily loans. So that's how we're managing the rate spikes and everything else. So those are forward swaps. The orphan swaps that we have, they will have some basis to the basis swaps and market to market, and those are the ones that get terminated.
All right, and so in terms of the long-term liabilities, the largest decrease that you can see here is in bonds payable, and that was primarily due to some special redemptions under the HMRB indenture.
Liz, is there a notation here somewhere for if we do a deeper dive? Can we do a deeper dive in terms of the programs that we have, like the MIP program and the multifamily bond program, and then the single family? Can obviously not for this slide, but in the report itself as a follow-up, we can go into a deeper dive to understand the allocations in each of those programs.
Absolutely. At the back of the ACFR, there are some combining schedules, and it details out the breakup of these sort of high-level totals that we report on the front financial statements.
Great. Okay. Thank you.
There isn't no comparison to each year. That would have to be something designed separately, but it does just get the current year breakdown.
Okay. Thank you.
Of course. All right, so next slide. here we have the statement of revenues, expenses, and then changes in net position. So the largest increase that we're seeing in terms of the revenue was a 14.1 million increase in interest income. And as I mentioned, when we were talking about investments previously, there was just more favorable interest rates. I think a lot of people were seeing them across the board during 2023. And then we also had a $23.4 million increase in loan fees, and that was due to increased production. There was a $43.7 million increase in other expenses, and that was primarily due to costs associated with the program administration of the TBA loans, just some costs that were needed to get that up and running.
Does anyone have any questions on that before we kind of go over a couple more things?
I had a question from before. You mentioned that you've been doing the audit for quite a while. How many years have you been doing the audit?
I think 10 years. Yep. But we've had several rotations. I've only been the principal for 4 years. So we've had about 3 different principals in the engagement. So internally, we've been rotating around.
It's helpful.
Okay, we can go to the next slide. All right, so in the prior years, we've done a bunch of statistics, and this year we only did one because we thought this one was kind of the most important, kind of looking through like your receivables and kind of where you've been going over the years. So just real quick on this one, it was kind of interesting this year, you know, you kind of have like an up and down tick, but you're kind of back up on the uptick with now with the market and kind of getting back out there. And there's been kind of a changed approach. So with some more bonds, more loans being issued. So I'll be interested to see kind of how this kind of goes in the future. But yeah, I just want to kind of show this as a 5-year comparison, the trend analysis. So let's go to the next slide. So with that, I just wanted to let you know what is in the future, what's coming for the 2024 audit, which we have kicked off for this year. And I know Oksana kind of briefly said that hopefully this year we're aiming to be done by the end of the year. I think she's got some information that looks like we're going to be getting these reports sooner. So we're teeing up to get everything scheduled to get back on track and have this done by the end of the year. So a couple of changes that are coming for the 2024 audit is there is a new set of auditing standards that were put into place this year. And this is really all IT. So this is going to be really for the IT portion of the audit. Just additional documentation and additional deeper dive into the business environment when you think of IT, just because how everything's been changing, everything's much more electronic. It's kind of just asking more clarifying questions for this year. Where you will kind of see the differences from the prior years is that there's just going to be more time evaluating the controls, more of our IT specialists working with your IT group, just a lot more questions. A little bit more requests for more documentation. So we already do, work with your IT team and a couple other items, of vulnerability and like some other impact studies we've done. So just more of that for this year for the audit. Any questions on that? Okay. So then just want to kind of go over a couple of the new GASB standards that are coming out, just 2 of them to keep your eyes out for. So you can go to the next slide then. So we do have GASB 100 for accounting changes, for changes and errors. So basically this is kind of looking back at the old fashioned, if you think about it, Oksana and team is the prior period adjustments. When you think about any or change in reporting, it was kind of just not really too much consistency going around in the industry. So basically this is a new way of accounting for any of these changes or error corrections, basically just the updating the disclosures that make sure they're more understandable for the readers. We haven't had, there hasn't been a prior period adjustment on CalHFA's financial statements in many years. So I don't foresee this impacting you all for 2024. The next one, which this will probably impact, is GASB 101, compensated absences. So this is, looking at sick leave, annual leave, any kind of liability that could be out there related to leave policies. So it really has a deeper dive for the agency to kind of look through and see what they have, and probably enhancing your footnote. In the past, sick leave was basically excluded from this, and now sick leave should be, reviewed and determined if there's some sort of, if an individual is terminated or someone leaves, that sick leave is, paid out. It's a possibility now that should be reported as part of this, this liability. And then also taking into consideration the parental and the military and jury duty leave. So a very small standard, but definitely something that the agency should take a look at, see if their policy is in accordance with this, and there's a possible adjustment to the liability that's recorded on the books as compared to the prior years.
You do me a favor. I mean, maybe Tina or Chris, you can help me out with this. What is the department standard, Ben, when it comes to tracking these types of leave?
I'll take that one. This is Chris Schultz, Chief Deputy Director. We follow the general CalHR practices on sick leave, annual leave. So under the same limitations, right? I get a notice every year that my sick leave balance exceeds the state balance, and I should take a bunch of time off to get that leave balance down. But we have the same challenges. We experience the same challenges all other state departments experience.
Yeah, you set it at like the 980 and try to figure it out from there.
I think it might be 6, right? So the balance is 600 and something, I think, right? And if you go over that balance, you're encouraged to get it down, right? And the challenge, just for the audit committee's benefit, right? Yeah. Well, just in general, right? Many public employees carry relatively high leave balances. CalHFA, in my experience, has a very effective program trying to get people to use their leave balances and get under the requirements. So I think we're doing as well as we can.
And I was just looking at your the ACFR. So this past year, you only have about 2.7 million in accrued compensated absences. Just to put it in perspective, honestly, it's not really material for the audit, but definitely because it's a standard, we'll definitely for 24 be looking into it, or 25. Excuse me.
Yeah, I apologize, and Mr. Henning, if I can also add, right, we get a lot of employees who transfer from other state departments or transfer out to other state departments, so they bring those balances with them as well, right? So some of this is under our control, and some of this we just do as good of a job as we can managing while they're with us here.
I understand the issues with state employment, but I just wanted to know that because it's not something that would generally be picked up in the GASB and a general audit. So appreciate that, Chris. Thank you.
So we have some time. Okay, and then the next couple slides, just some stuff on the next one, insights. If any of the board members want to know a little bit more about CLA, we do have our QR code there. And then right now, just any questions or feedback. We appreciate all the hard work that's done on CalHFA side. This isn't an easy audit. There's a lot of information that we request. A lot of time that goes into this to get this all done. So we appreciate you. We appreciate the working together. Thank you.
Thank you very much, Mandy and Liz. I think I'm going to open it up to the committee members to see if they have any additional questions, and then I have a couple comments. Mr. Henning, do you have any questions? Any other questions?
No, those were mine. Thank you.
Okay. How about you, Dr. Wright?
So thank you, Chair Sotelo. I had one question that goes back to the estimate for, I guess, future estimates for the single family projections. Just wanted to get a little bit more color on how we're projecting our program going forward, specifically the single family piece of it. It sounded like there were a few categories that the staff looks at. And as a follow-up to that, and you probably did not, because no one knew that rates would get cut this week. Did you anticipate that? But that's obviously we're not in the business of knowing when the Fed's going to lower rates, but.
If I may, let's direct that to Ms. Johnson Hall. I think that, understanding the correlation between the programmatic activities of the agency and how they're reflected in the audit is something that Mandy can speak to. But in terms of projecting out, the volume and the programs themselves, maybe Ms. Johnson Hall can comment on that.
And thank you, Chair. And I would also ask Erwin Chan to unmic. I'm going to start the conversation and ask him to add additional color on the second of your two questions. Regarding the rates, Dr. White, we actually do follow the rates quite closely because especially in the single family space, it does obviously impact the incoming loans that we are taking a look at. And it's particularly relevant in the space that we look like in terms of our AMI levels. A change in those rates could mean something very dramatic to our results. And so with that, I would like to ask Erwin to add additional color and also speak a little bit about projections and how we manage that process. Erwin.
Yeah. Thank you, Tina. So, the board did approve an operating budget in June of this year for the current fiscal year that we are in. We closely monitor single family loans being produced. And this was sort of irrespective, when we develop the budget, we start with a revenue projection and we kind of fit in operating expenses to that to make sure that, the agency is operating, as efficiently as possible and obviously generating enough revenue to cover its expenses. I will say that it is the projections themselves contemplated, the rate forecast at the time. And therefore, we will be coming to the board and the same quarterly intervals with any updates and changes should they be necessary and required. So I think that, I monitor we receive daily updates in terms of single family loan production. Another single family team is very aware of what is being produced. I am as well. And again, to the extent it needs to be, we need to update our operating budget revenue projections. We will do so with the board, in full, we will inform the board and then recommend any sort of changes as necessary. Sometimes, if they are, depending on sort of materiality, we will say that, hey, if there's a positive variance, we may not need to amend the budget. If we would just be aware that there will be a positive or non-material positive or negative variance. But again, we have committed to this board that we will update it quarterly. Again, this project not only on the operating budget, but also on the units being financed. So that strategic plan will be coming to that board every, at the close of every quarter. So I think in the October board meeting, we will most likely be presenting the fiscal year end, and then soon thereafter, we'll present the first quarter results ending September 30th, 2024.
And also amending my previous statement, I sort of indicated that we were watching that in terms of the number of loans that we might be able to pick up, but we also monitor for the purposes of refinances too, which sort of overall impact our revenue ultimately most. We did see a tremendous impact when the rates were low several years ago, and when I started in this role, we were watching things roll out of here faster than we can say Tina Johnson Hall. So we do recognize that we have to watch the in and out as part of monitoring how well we're performing in this area.
And I do have one last sort of bit of information for this committee here, is that the Federal Open Market Committee, it only adjusts short-term rates. Its actions taken prior, during the pandemic, were to purchase mortgage-backed securities, which drove down long-term rates. They only made an adjustment this time to short-term rates, which really didn't have a material impact as to our long-term, rates that we offer, because again, we offer 30-year fixed-rate mortgages. The Federal Reserve doesn't really, unless they act in that market, they don't really directly affect that. If Oksana, I think, had some additional comments, or may or may not have additional comments on the impact on the agency's financials.
Yeah, I just want to add a quick note for Mr. White. Basically, the way how we do the estimates or the set estimates for the single family portfolio, as you know, we only have a very aged portfolio back in 2006, 2007, when the market crashed. We stopped buying the whole loans. So we currently have only, as of fiscal year 22-23, there was a little bit over 5,500 of those whole loans left in our books. And then majority of our financials are actually the single family portfolio. It's based on TBA performance. So there's not really a whole loans. So we don't really need to set, basically allowance for loan losses for those loans, because we don't technically own the loans. But we work with financing division, and they have a historical performance of all the loan portfolio for the past 20 years. So we look at the trends and how the loans perform during different markets. And then we just, it's based on the labor reports and based on other factors. It's a very complex formula. We have actually a specialist who actually dives in, and every quarter we sort of look and evaluate those trends, and we adjust accordingly our books. This is just only for that 5,500 loans that we have as a whole loans, but everything else for the single family related, there's no whole loans owned as part of our financials.
That's a very helpful distinction. Thank you very much for that. That's good. Erwin, in terms of what you were talking about with the longer term rates, that's also impactful to the multifamily side, correct? So if you could maybe speak to the multifamily.
Right. So on multifamily lending, the TBA mark, we are a taxable borrower for single family, and we are a tax-exempt borrower for multifamily, essentially. I guess that's sort of the simplistic way to look at things. And so again, on terms of the yield curve on this multifamily space, we look to a tax-exempt index, and that's the way we essentially price our permanent loans. So that accident, there's two factors there that influence what rates we can offer to potential developers, to our borrowers. One is the overall interest rate in market. Again, the FOMC sort of lowered the short-term rate, so we will probably see a short-term, on the short end of the curve, a decrease in rates, steepening the curve. But again, they don't really affect long-term rates out there as much as sort of the overall sort of tax policy in the United States. Tax exemption has various values depending on what the overall rate of taxation is, the highest marginal rate. Which means that our federal policy in terms of taxation really is one of the key factors besides the overall interest rate environment as to what rates we can offer our borrowers.
Great. And then Mandy, in terms of the audit itself, in looking at the audit and your findings, I'm glad to see that there were no findings, but is there anything that would be of note relative to our multifamily lending, our single family lending, that would be that you would issue like words of caution around sizing, holding, just anything in terms of servicing that might not raise it to the level of a finding, but let us know that there's something that we should be cautious of or mindful of.
Yeah, I think the biggest thing is, and again, this is just my perspective, not my firm's, is that if you're going to be getting back more into these markets, just to keep an eye on those allowances, you know what I mean? It's been kind of flat, it hasn't been much for you to add on, but if you're going to start going into that, let's see what's going to happen in the market. Yesterday is going to, see in the future what's going to be going on. So just keeping an eye on that and just valuating those loans on both sides of the programs. That's the biggest thing, is keeping an eye on that. I think that was maybe an issue many years ago, is that your allowance just wasn't understandable. Like, we needed a lot of help to understand how you were calculating it.
Mm-hmm.
So that could result in a change just going forward with more market activity.
Does that relate to like the loan to value on the multi?
You all do a lot more with the delinquencies, like looking at, how they're paying. You don't do as much. And Oksana, I don't think you guys do much with the loan to value. So you more do about, are they delinquent?
Yeah, it's historical performance of the whole portfolio. That's how we look at the trends. And then we evaluate the market changes, like I said, and different factors that sort of, lead into potential maybe loans become delinquent or have some kind of issues. And then our portfolio is generally very healthy. So we haven't really had any kind of issues, even on the multifamily side. We've just really rarely have just a couple strugglers, and we kind of have things that we work on, but nothing that just to mention. We haven't really written anything off or anything that we have to do like drastic.
I see. So it's more of a performance
Right.
measure rather than a valuation or a loan to value measurement.
Correct.
So, okay, so we don't really use that as a guidepost.
Yeah,
Okay.
and just for reference, out of 5,500 loans that we have as of June 30, we only have 9 delinquent. So this is not something that you can even be like putting this, concept. I think this is just looking overall on historical performance.
Right.
And since I have a floor, can I just add something real quick? And I think Patrick Henning was asking it early, and I just couldn't really have a time to chime in. Regarding the audit. So Mandy has been with us for about the firm, the CLA, about 9-year contract. We have extended and board approved it. So this fiscal year 24-25 will be the last year of the contract. And so we will be talking to the audit committee and making sure that we're going to the RFQ, the bidding process. And so we already actually start working, our team and start working on putting the paperwork together, and it's going to go up for a bid. So I understand.
Appreciate that, Oksana. No offense to the auditing firm. I think they did a wonderful job here, and appreciate Mandy, in particular, your work and going at a 4-year group pace. I mean, generally what we find and what the treasurer is comfortable with as a CPA herself is around a 3-year term for a team and a 5-year term for a firm. That's what we find most comfortable. That's not necessarily what a standard is. I think the private sector looks generally at a 5-year term before you turn over teams, and a 10-year term, which is probably why they set this 10-year relationship. Right. If I'm saying something that's not true to you, Mandy, please tell me. But Oksana, I think that looking forward, I would strongly encourage our audit committee and the full committee to take a look at a shorter term into the future. And it has more to do with just freshness of eyes, taking a look at these numbers year after year after year. Might do a wonderful job, but at the same time, sometimes even just in our daily lives, we miss a little thing here or there. And we want to make sure that we have the best audits possible. So, but I appreciate the clarification.
That's very helpful, Mr. Henning. I mean, I think that, we've had these debates when we've renewed the contract or extended the contract. So we very much would love to get your feedback and the treasurer's feedback on the RFQ when it becomes available. And
I very much appreciate that. What I'll say is, and it goes to some of the conversation I was having with Mr. Schultz earlier, is that there are limits within the state contracting system as well, but I think that 10 years it makes me a little more uncomfortable than I'd like to be in general.
Okay. So maybe at the direction, Miss Johnson Hall, when we get ready to go through this process next year, maybe you can bring that to the committee as a forecast in terms of what you propose and what's most comfortable to the staff and the team, so we can advise and consider.
Okay, we'll talk.
Okay.
Yeah, no, actually, this is something that we have been thinking about already, Chair. And as indicated by our controller, we have, and I think we already even provided these folks with notice that we intend to go out.
Right.
Okay. But I think the bigger question that I think that we will bring back is, what is the committee comfortable with in terms of what that turnover looks like? And I don't want to, I can't say that I can read your mind on that, but I think that's probably where you were more focused on, is a proposal on that.
Yes, yes,
Okay.
and that's
All right.
kind of, we want to be mindful of the staff and the team.
Yes.
And we take our oversight very seriously, and there's a lot of controls that we've put in place over the last couple of years that I think will make other committee members feel comfortable that there is, you know, a checks and balance going through it. So we just have to consider it kind of all collectively.
Sounds good. Thank you.
And I don't want to I don't want to sweep the fact that we only have 9 defaults out of 5,500 loans under the table. I think that's fantastic. The borrowers out there, good job, great job, and you know, thank you. The multifamily side, I think hopefully that's 0. I don't know if you have the multifamily loan side.
Yeah, and Chair, I should note that the one thing that we are thinking very, very strongly about is that, you know, the multifamily is gearing up via the MIP process to look very differently than what it has looked like in the past. And so I do think that we are putting a lot of thought that we could share with the team, with the committee, I apologize, about what we're thinking about as we move into the next evolution of multifamily, because it's going to, in my opinion, look very differently. And that's just based on the size of the loans, which if you look at what they looked at pre-MIP, it is quite different than what it is looking like now.
I see. Okay. Well, I think that's something certainly for the broader board to consider, but to the extent that it creates, you know, risk factors or considerations for us, the audit committee would be very happy to explore those programmatic and underwriting changes that will impact our risk profile.
Thank you. Appreciate that.
Great. So Dr. White, any other questions? Follow up? No?
No, I appreciate the very thorough context around my question.
Great. So with that, I'd like to go ahead and open the topic for public comment. Melissa, if you could just let me know if there's anybody in the audience that's interested in speaking. Okay. Melissa, I can't, if you're on mute, I can't
Oh,
hear you.
sorry about that. Yeah, I'm looking right now, and if anybody's interested in speaking, please raise your hand. I do not see any hands raised at this time.
Wonderful. Okay. So we'll go ahead and move on. Thank you very much, Mandy and Liz, for your presentation. I found the slides very, very informative. And Oksana, as always, congratulations and thank you for a great job.
Apologies, I do see a hand raised in the participants panel now.
Okay.
Yes.
Melissa, can you call the speaker?
Yes, Laura, if you could unmute yourself, please go ahead and make your comment.
Hear me?
Yes, Laura,
Yes.
please go ahead.
Oh, hi, thank you very much. I appreciate you opening this meeting to the public. And I appreciate the presentation. And my name is Laura Zanzuki. I'm a homeowner in Martinez. I'm a recipient of the of your agency's ADU grant in 2022. I'm also an employee of Contra Costa County. Why I wanted to jump into this meeting today is I just wanted to put on your radar the current fraud case with Anchor Tiny Homes and kind of determine what actions your agency takes when this grant gets essentially used for fraudulent purposes. So I'm not sure if you're aware, but is it one of many ADU companies that have essentially kind of operated a Ponzi scheme, and they're under investigation right now with several county DEA's office. We're involving the FBI. I'm talking to a class action attorney that does housing rights. Essentially, so that's a $40,000 grant that goes through escrow account and for pre-development costs. So this company takes advantage of that and asks upfront for all that money and then abandoned all the contracts. So that I was unfortunate to be involved in that scam. So just asking for putting it on the radar of anything you guys are doing. I don't know if I'm in the right committee meeting exactly, if you guys can direct me to also one where shapes more policy, but also from your standpoint, from auditing these records, what do you guys do in terms of a case like this? So thank you.
Thank you, Ms. Laura. We cannot respond directly to public comment, but your comment is duly noted, and the staff, I see Chris shaking his head, so the staff will follow up either directly or indirectly on this issue. But thank you very much for bringing this to the audit committee's attention and for your feedback.
Thank you.
Melissa, do we have any other speakers?
I do not see any other hands raised.
Okay, wonderful. Thank you very much. So with that, we're going to go ahead and move to item number 5, where there are other committee matters that we can discuss at this time. I think we brought both
Chair Sotelo, pardon
Yeah.
me for interrupting again. I do have another public member who's raised their hand. And I would just ask if there are any other members in the public that are interested in speaking, please raise your hand now and we can take you in order. So if it's
Yes.
all right, may I go ahead and open the mic for Kathy Nguyen? Kathy, please go ahead and unmute yourself and make your comment.
Miss Kathy,
Kathy?
are you
Yeah,
available?
Kathy, we can't hear you, Kathy. You want to unmute your mic?
Miss Kathy, we can also hear you on the next agenda item. So if your comment was about item number 4, we'll consider it now. If it's about just a general item, we'll consider it under item number 6. So you'll have time to, maybe Mark, you can help her put some comments in the chat on how to unmute her phone. So with that, Melissa, any other hands raised for item number 4?
Okay, it looks like Kathy, you might be able to
Hold on
speak
a
now.
second. Let's try it again.
Okay, Kathy, if you go ahead and speak, we'll see if we can hear you.
Thanks, everyone. I apologize. This is actually Kathy's husband, John. Thank you all for the forum and the opportunity to speak here. We just wanted to piggyback on Laura's comments, maybe with just something that the committee can consider in the future if and when future grant opportunities may become available. If there may be special consideration for folks who were, fraudulently affected by, this Anchor Tiny Home or similar schemes out there in the country. I think that's all we wanted to comment and just see whether, I know there are specific requirements in order to meet the grant qualifications, but I think given these circumstances, a lot of us are, seeking some type of support from, these type of groups to kind of at least make us somewhat whole again.
Thank you very much, John, for your comments, and I just want to make sure we acknowledge him and the staff acknowledges them as well.
Thank you, Lana.
Yeah, perhaps this is one of those items, staff, as you think of an item to approach it. While it is not purely an audit function for a third-party auditor, should you audit the program and want to report back to the committee, under item number 5, we can put this as one of our potential items for future meetings. The other 2 items that we have for potential meetings are, again, the RFQ and then the follow-up on the programmatic changes on the multifamily side as they may impact our risk profiles. So those are items that would not necessarily come back for the October 24th audit committee meeting, but should be put in as a potential for future topics on future meetings. Do board members have, committee members have any other topics that they would like us to put on the list as we consider agenda items for future meetings?
None at this time, Chair.
Okay, great. So we will be having our next committee meeting sometime in October. I don't think we're going to have it on October 24th because we have a full committee. We have a full board meeting that day, but we will find another time that's convenient for all parties to participate in an audit committee meeting. So with that, I'm closing item number 5, opening item number 6 under public comment. Are there any other public comments available? Even though we cannot act on them in this committee, I do encourage the public to give us their comments and their thoughts. It's something that we can certainly acknowledge and follow up on. Any other, Melissa, any other hands
Yes,
raised?
again, let's ask everyone if they have a comment to please raise your hand now. We'll give you just a moment to do that. And I do not have any hands raised.
Wonderful. Okay. So with that, I'd like to thank all the public for their participation today. We really do appreciate you taking the time to listen in on our committee meetings and our findings. And again, to Ms. Johnson Hall and her entire team, as well as Mandy and Liz, thank you for participating in the committee today and doing such great work for Californians. So with that, I'd like to go ahead and acknowledge my fellow committee members. If there's any motion to adjourn.
Motion to adjourn.
Wonderful. Okay, so with no objections, we'll go ahead and adjourn the meeting. Thank you, everyone.
Thank you.
Thanks, everyone.